Tuesday, July 2nd, market analysis. Stan Ehrlich, good morning. 9:56 California time, just a little after the middle of the traditional hour trading day. That would be 6:30 California time to 1 o'clock California time. The old-fashioned stock market trading hours slowly fading away. Now, I start out with the indexes and I go to futures, and sometimes I do some other stuff. Cycles, seasonals, forex, crypto, you name it. And today is no exception. I will start out with the indexes. We have on the E-mini right now a bullish engulfing. Today's low is a little bit lower than yesterday's low. And in fact, it is a new low for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 previous trading days. Didn't stay there. Looked like a downside breakout at the time, coulda, shoulda, woulda, but it reversed completely and now has a bullish engulfing at the moment. Here's the important part. It's only up 4 points, very, very small amount. If it goes below the close of yesterday, it will immediately be the fourth red bearish engulfing ER cell signal in the last, 7 days, 8 days? I do not think I've ever seen 4 in 8 days. The implication is the market's topping out very seriously, but that's not necessarily true. Since I haven't seen 4 bearish engulfings in that short amount of time, I frankly don't know what to make of it, to be honest with you. It could very well be extremely important. There's the 3. And again, all it has to do is go negative and stay that way at the end of the day, closing lower than yesterday's close, and we'll have our 4th bearish engulfing. Now, that's the daily data for the E-mini. The 1-minute chart shows us a lack of follow-through when we made new lows around 5 o'clock this morning, California time. Popped back up to higher than yesterday and then started to sink some. All we have to do is keep sinking a little bit more. Right now, it's very quiet. Interesting. Okay, waiting for that bearish engulfing again and some final downside. New low closings below previous lows. That would kickstart, I think, this break I'm looking for. By the way, the top formation is also a double top. We've got both highs on this double top with bearish engulfing ER cell signals, both of them. And in the YM, the Dow. Okay. Back to the 1-minute chart for the mini and spider. Double top, as you would expect. If the E-mini has it, the spider's probably got it, vice versa. Could have another bearish engulfing if it will go below yesterday's low, because it hasn't been there yet. The difference on the E-mini is it already was before 6:30 in the morning. E-mini has an outside trading range day. The SPY, shorter trading hours, does not yet. So it needs to go all the way down below yesterday's low in order to get red. And that'll be the 4th one in the same number of days. Again, very rare. I can't remember in the years I've been watching this, 4 in about 7, 8 days. Next, spider. We sold short the SPY today at about, give or take a minute or two, 8:41 California time AM, 0.05 from the exact high of the day. The bearish engulfing occurred, the last one, on June 28th. Big rally up, made minor new historical highs. And this would be the 20th, the first bearish engulfing and signals and trades. Then again, it did the same thing essentially on the 28th, creating the double top and a huge bearish engulfing. And my ER3 new short trigger was 0.05 below that rally high. We're short for all practical purposes from the exact high of the day, within 5 ticks. Now, so far, so good. You can see that our scalp trade has lowered its stop dramatically quickly already, but not profitable quite yet. And the other little yellow line up here is the stop for the ER3 overnight. That green trade line right there represents both the scalp and the overnight, because they do get into the trade at the same time. But they have different stops because the scalp obviously needs to get out by the close and tries to lock in a profit very, very quickly. We haven't moved down enough yet. Or I could tighten the kicker on this and then make it move down faster to probably lock in a small profit if I wanted at this point. Easily done. Not going to mess with it right now. Next chart, QQQ, double top formation. We are now short. We're looking for this bearish engulfing combination to produce a move down to a minimum of 460 and a third. And to be honest with you, I think it's going to go down to 450 and maybe 432, 33 area on the QQQ. This is the 5-minute chart on the Qs. Got short on a little bit of a bear trap a couple of days ago. Stop came down some. We rallied a bunch, but did not get stopped out at this point. And it's a bit of a loss. We'll see how this turns out. The last trade was a scalp profit and an overnight profit also on the ER1. ER3 never got filled. This little red line right here represents, I want to go short at that price, didn't make it. Never came close, never came close. And we only look for 3 days after the signal day for an ER3 position. The ER1 overnight is the green line right here. And it finally hit the stop right there. We made money on both. Could have done better. Didn't move this trigger kicker, which is the yellow trailing dotted line. You can do that. You can speed it up. I recommend it once you know how the system works. Now, the minimum downside objective, and that's not supposed to be tilted, that's better, is 461 and a little lower on the QQQ double top formation. I'm looking for the downside breakouts. Next, NASDAQ futures, NQ. Not quite a double top. I wouldn't really call it that, but the high 2 days ago was right smack dab at 3 previous rally highs that were important, making it the 4th time it was up there and it failed. But look, we're not actually down on the day. We're up a little bit, and we're putting in jeopardy this major sell signal on the highest high of the move so far. So I'm looking for a bearish engulfing at any time and or just plain go down one way or the other. I could have, would have, should have at the moment gone short on an ER3, but it took well over 3 days, 4, 5, 6 finally hit my price, but I don't do that, only within 3. Next chart, NASDAQ futures. There's that trigger for ER3, 1 day, 2 day, 3 days. No, it's not plotting. And finally it would have gotten hit, but no. Now, the scalp traded extremely well on the 20th, which is the top of the market. And the overnight ER1 did very, very well also. And we're currently flat. Next chart. Dow Jones Futures has a double top formation. We have a bearish engulfing ER sell signal on the second high and a bearish engulfing on the first high that actually should be red. I'm not sure why that turned white. I'll have to look into that. 1, 2, 3, 4. Yep, within 5 days. So that should be red. On both highs, on the double top, on the YM, we have sell signals and a green buy signal on the very lowest low. We picked the top, we picked the bottom, we picked the top, and here we are 2 days ago. We have another sell signal. We're short ER3 yesterday's rally, making a little bit of profit on the day after. We're still holding the trade. Nothing nothing major yet. Looking for new lows. Here's the YM 1-minute chart. We got short right there, basically on the opening yesterday. Almost got stopped out on the rally, but didn't. The day trade scalp was a very short-lived, very small profit. The overnight position, we are still in it, doing okay. It's only been 2 days. Let's watch for new lows. Okay, Russell, really don't care too much. I think it's going to go lower. And the Russell 1 minute. Bonds, low and last almost, about where it opened. It did open a little higher yesterday. It got oversold. Bounced a little bit, but it's not holding it very well. Right now, just up 30 seconds, just 9 higher, slightly higher. No big deal. Right almost exactly where it opened and could easily make a new lows for the day. I think it's going to go down to at least 115.08 and maybe 14.02 in the next week or two. Next, notes. Basically the same commentary. Too bad didn't get any sell signals on the bonds at the top or the notes, but the bonds did have this small double top, which has already been fulfilled day before yesterday, a lot more yesterday, and today sideways. Notes, kind of the same thing, but not the same formation. A little support held it yesterday, but I do think it's going to go down and challenge this 107 area below 108. Next, crude, heat, unleaded. We've got a new high on the rally, but now the third day overbought again. I think it may try to form a broad double top formation if it can rally up a little bit more to approximately 86, I would say, would be just about right. And maybe even get more overbought. We'll see if that can happen. Meanwhile, I'm looking for a bearish engulfing at any point because we are overbought and we are making higher highs. All we have to do is start to break down below the previous day's low with these kinds of trading ranges. Natural gas, oversold. Pretty much the opposite in a support area. But 2 days ago on Friday, we broke out of this double top formation. It now has a minimum downside objective of about, let's call it a little below 2.0. Not much. It's a little. I'll tell you 1.964. But if I get down to 2 or a little lower, I'm good. New lows today in a support area and oversold. So now I expect a bounce back up maybe to 2.640. And I'm not ruling out something a little bit higher than that, but that would be my first expectation, and then turn down. Heating oil. This is not a particularly relevant line, to be honest with you. I thought it might turn into a head and shoulder bottom. It didn't. That would have been the neckline. Delete. We do have an upside breakout of sorts, but it came into resistance and broke through it yesterday on a closing basis with a little bit more follow through today, but overbought again in a larger, bigger, longer term resistance level. And I don't think it's going anywhere. I think it could top out anytime, turn down and challenge these 2 lows that we've made back into this major, major historical support area. Very, very big. I'm looking for a turnaround, looking for the signal that we're going to start heading lower in heating oil. Gold, silver, platinum, copper, then grain and meat. Not too much importance today in gold. Sideways. RSI, very, very neutral. 40, 50, 60 is neutral. I think the double top is the major formation. It's just taking quite a while to break out to the downside. I need a closing price a little below 2304. And then it should go to start to go down to 2144. waiting for that bearish breakout, expecting it. Silver. I just missed a little bit in time, about 2 days earlier than expected, and a little bit lower than I thought. The last shoulder high and a head and shoulder top in silver, which broke out to the downside on the 25th, tested the neckline 2 days ago. And today, again, interesting. Normally, you don't have two tests of the neckline. Today's high is right smack dab on that neckline again. I just need it to start to close below 2 or 3 or 4 or 5 days worth of previous lows and new lows to move down in order to be further convinced the head and shoulders are going to work correctly. This is a little unusual, but not doing any damage, just a little worried. That doesn't count, though. Platinum, head and shoulder top in the process of building. My little green circle, the middle of it, price-wise, was almost exactly at the right price. It just went up a little bit more than that, and only on the next day. So I was a day early and a little bit too low in price. I think that's pretty much bullseye almost. At the moment, we have a bullish engulfing. We're not oversold, so it doesn't mean too much to me, although it does imply the market could start to rally some. And we've got resistance overhead. Let's see how it handles this last shoulder. I don't want it to get above it. I don't want it to close above it in particular. And I certainly don't want it to close above, say, 1044. That could do some serious damage to this formation. Next, high grade. Support, oversold. Nope, not quite oversold. Too bad. Let's send this to the background. Yeah, there we go. And a little rally. Going nowhere. I don't think it's going to go anywhere. Might rally just a little bit more. Maybe 4.528 something. But I expect it to turn down very soon, slightly higher, maybe, and make new lows into the support area again and through the support area down to lower levels, waiting for new lows. Beans made new lows for a very long 2 years, 3 years, something like that. Considered to be a long-term bearish breakout. Yesterday, we managed to come back up a little bit, closing slightly higher. For a minor reversal, doesn't mean much. Today, a little more rally doesn't mean much. This could turn into something important, but I don't see the right indications. Bearish on beans. I'm turning bearish on grains in general. I have to. The support levels aren't holding. The formations I talked about for the last weeks and months, in some cases like soybean oil, are very much in jeopardy. Let's look at soybean oil. That was the shoulder low I thought we had on a very large 2-year head and shoulder bottom. But we now have a possible little double bottom over a month and a half and a nice little rally. Now, true, we have made a new high higher than the two lows. That should be a minor upside breakout. Therefore, the minimum upside objective would be you take the highest high and you measure straight down to about the average of the two lows. That works. And you take this and you measure straight up from the highest high and a little bit above, right around this resistance area of 50.80. I'm going to say just a little over 50 is the minimum upside objective if we do have a closing breakout, which would be these prices are higher. Looking a little bit better for soybean oil today. Now, I didn't expect that, but I'm worried about the overbought condition. It could turn it down any old time, and the major trend is still down. Meal, a little rally, going sideways, did break out of its double top formation with a bearish engulfing at the highest high and the beginning of this down move, but it's stalled out now for about 3-4 weeks, looking for lower lows. Corn, looking for lower lows again. Barely hanging on, a little bit of bounce today, certainly not looking that healthy whatsoever. We are now trading in general at the lowest levels on this continuation data since April of 21, 3 years back plus. I'm bearish in corn. Looking for, frankly, a lot lower. Not quite sure how to measure this one at the moment. Looking for a lot lower in corn. Wheat. This double bottom formation, I don't think is going to survive. Resistance is stopping a little bit of a rally here. Let's put it a send to the back. Good. And that's it. I'm looking for lower levels in wheat too. Very, very much lower. It just has to start closing below 555 and 3/4. Let's call it 555. Next, cattle. Bullish rally, got overbought. Almost the exact same highs 3 days in a row. Smack dab at the beginning of a little resistance, which was the previous top of the market way back in September of last fall, late summer. Came down to some support and is bouncing just a little bit. I don't think this is going anywhere. I think we're going to see lower lows again. Not quite that convinced about cattle opinion. Hogs. Sold the top of the market, ER sell signal, D high day. Turns out to be the high of a head and shoulder top that was a little bit lopsided. But we have a downside breakout. We have a minimum downside objective already fulfilled, past tense, old news. Came down, had a bullish engulfing in oversold conditions. Went up to resistance, came down again, and had a double bottom with the second bullish engulfing being an ER buy signal again. We have a double bottom in hogs with both lows being a buy signal. Now today, we just might have a new high closing price for a few days, but I really wanted to close above 91.22, the highest high, which was yesterday's high, to keep the momentum on the upside going. Double bottom, minimum upside objective approximately somewhere in the ballpark. I'm going to say 98. And that's it for today. Let's take a look at the E-mini. We got a little rally. So we have a minor new high. It doesn't change anything on the charts. I have to say only a close above previous double top highs is going to start to change my longer term opinion, which is bearish. Have a profitable trading day. Profitable trading to you.